Greetings to all finance enthusiasts and curious minds out there. Welcome to HouseLux Estate, your reliable source for all things related to finance and investments. Here at HouseLux, we believe that knowledge is power, particularly when it comes to managing your hard-earned money. Our mission is to provide you with clear, unbiased, and actionable information that empowers you to make informed financial decisions. Today, we're turning our focus to a topic that has piqued the interest of many: the pros and cons of a high-yield savings account. It's a subject that often sparks debate among financial gurus and everyday savers alike. But fear not, we're here to guide you through this financial labyrinth with a balanced approach, weighing the benefits against the potential drawbacks. So buckle up and get ready to journey with us into the intriguing world of high-yield savings accounts. Stay with us as we delve into the world of high-yield savings accounts, exploring their pros and cons. To start off, it's essential to understand what we mean by a high-yield savings account. In the simplest terms, a high-yield savings account is a type of savings account that earns a higher interest rate than a typical savings account. Sounds enticing, right? This higher interest rate is its defining characteristic, enabling you to grow your savings at a faster pace. Think of it as a turbocharged savings account that works harder to increase your money. So, how does a high-yield savings account differ from a regular savings account, you may ask? Well, the primary difference lies in the interest rate. Where a regular savings account might offer a minimal interest rate, a high-yield savings account usually offers a significantly higher one. This means that over time, you can earn a substantial amount more on the money you save. Now that we have a clear understanding of what a high-yield savings account is, let's move on to discuss its pros and cons. Let's first explore why a high-yield savings account can be a beneficial financial decision. One of the most significant benefits of a high-yield savings account is, as the name suggests, a higher interest rate. Traditional savings accounts typically offer modest interest rates, sometimes as low as 0.1%. In contrast, high-yield savings accounts can offer rates that are 20 to 25 times higher. This means that your money isn't just sitting in your account, it's working for you, growing at a much faster rate. Let's imagine you have a nest egg of $10,000. If you put that money in a traditional savings account with an annual interest rate of 0.1%, you'd earn a mere $10 after a year. But with a high-yield savings account offering an interest rate of 2%, you'd see a return of $200. That's a massive difference. Another benefit of high-yield savings accounts is the power of compound interest. Your interest is calculated not just on your initial deposit, but also on the interest you've already earned. Over time, this can significantly accelerate the growth of your savings. High-yield savings accounts also come with Federal Deposit Insurance Corporation, FDIC, protection. This means that even if the bank fails, your deposits are insured up to $250,000. It's like having a safety net for your savings, providing an extra layer of security. Lastly, high-yield savings accounts are typically accessible online, making it easy for you to manage your money from anywhere in the world. This convenience can be a major advantage for those who prefer digital banking. These advantages make high-yield savings accounts an attractive option for many. However, they do come with their own set of drawbacks. While the benefits of high-yield savings accounts can be appealing, it's important to also consider the potential downsides. First, let's talk about possible fees. While many high-yield savings accounts are fee-free, some banks do charge monthly maintenance fees. These fees can eat into your earnings, especially if your balance is on the lower side. For instance, imagine a bank that charges a $10 monthly fee. If your balance is $1,000, that's essentially a 1% reduction in your annual earnings. Moving on to minimum balance requirements. Some high-yield savings accounts require you to maintain a certain minimum balance to earn the advertised interest rate. If your balance falls below this minimum, you could earn a lower rate or possibly incur a fee. So if you're someone who's just starting to save, or if you foresee needing to dip into your savings frequently, this could be a significant drawback. Next, let's discuss the limitation on transactions. Federal law limits certain types of telephone and electronic withdrawals and transfers from all U.S. savings accounts to 6 per statement cycle. If you exceed these limits on basis, your bank may close your account, or convert it to a checking account. This could be a major hindrance if you need frequent access to your funds. Also, it's worth noting that the interest rates on high-yield savings accounts can fluctuate. While the rates are typically higher than traditional savings accounts, they can go down in response to changes in the economic environment. So, while you may start with a high rate, there's no guarantee it will stay that way. Finally, while online banks often offer the highest rates, they lack physical branches. If you prefer face-to-face interactions or need services like notarizing documents, this could be a disadvantage. Understanding these potential drawbacks is vital for making an informed decision about whether a high-yield savings account is right for you. Given these pros and cons, you might be wondering, is a high-yield savings account right for me? Well, let's delve into that, shall we? High-yield savings accounts are not one-size-fits-all financial tools. They are best suited to certain individuals depending on a variety of factors. The first consideration is your financial goals. If you're saving for a short-term goal, like a holiday or a car, a high-yield savings account might be a good fit. These accounts can help your money grow faster than it would in a traditional savings account, helping you reach your goal quicker. On the other hand, if you're saving for long-term goals, like retirement or a house down payment, a high-yield savings account could also be beneficial. The power of compound interest over time can significantly boost your savings. However, you might also want to consider other investment options that could offer higher returns over the long term. Now, let's talk about your saving habits. If you're the type who likes to set aside money regularly, a high-yield savings account can be an excellent tool. The more you save, the more you earn. But remember, these accounts often come with balance requirements, so make sure you can maintain the minimum to avoid any fees. Risk tolerance is another factor to consider. High-yield savings accounts are considered low risk, as they are insured by the Federal Deposit Insurance Corporation up to $250,000. If you're someone who values security over high returns, this might be a suitable option for you. In essence, high-yield savings accounts can be a great tool for savers who are focused on both short and long-term goals, who have a habit of regular saving, and who have a low to moderate risk tolerance. But, as with any financial decision, it's important to do your research and consider your personal circumstances. The decision ultimately depends on your individual circumstances and financial goals. Make sure to weigh up the pros and cons, consider your financial goals and habits, and choose the option that best suits your needs. As we wrap up this discussion on high-yield savings accounts, let's revisit the main points we've covered. We've journeyed through the world of finance and investments and delved into the intriguing realm of high-yield savings accounts. We've looked at the pros and cons and explored the circumstances under which these accounts can be particularly beneficial. We began by defining what a high-yield savings account is, an account that offers significantly higher interest rates compared to traditional savings accounts. This is a major pro, as it allows your savings to grow at an accelerated rate. We also discussed how these accounts are typically insured by the Federal Deposit Insurance Corporation, providing a safety net for your hard-earned money. On the flip side, we also addressed certain drawbacks. High-yield savings accounts often come with stricter requirements, such as higher minimum balances or limited transactions. They may also have variable interest rates that can decrease over time, potentially affecting your return on investment. We then explored who might benefit from a high-yield savings account. Those with a substantial amount of cash that they don't need to access frequently, for example, could take advantage of the higher interest rates. It's also a great option for those looking to set aside funds for specific goals or emergencies, as the higher interest can help reach these goals faster. In a nutshell, high-yield savings accounts can be a powerful tool for growing your savings. However, they're not a one-size-fits-all solution. It's crucial to consider your personal financial situation, your savings goals, and your comfort with the associated requirements and risks. Remember, the right financial decision for you depends on your individual circumstances and goals. Thank you for tuning in to House Lux Estate. We hope you found this discussion enlightening. Don't forget to subscribe for more insightful discussions on finance and investments.